On news of a temporary US-China tariff rollback, the major market indices have been going absolutely nuts. In this video, we'll look at Tesla and also the Nasdaq in terms of structural levels. I'm going to share a really valuable insight on how to read across Tesla and other charts. You'll find an absolute game changer. Then we'll look at total crypto market cap, Bitcoin, as well as Ethereum. Price waves are always going from one structural level up to another structural level. If you know the structure, you're ahead of 95% of people. Let's go for it and let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love. When we look at the Nasdaq, we can see that the Nasdaq in the past trading session went pretty much nuts. Now, why was this the case? US and China trade talks agreed in Geneva that they would roll back everything to 10%. This is a really substantial reduction, but just please take note, this is a temporary rollback of 90 days, not a permanent one. Now, what does this mean for the markets? We can see the Nasdaq here. Nasdaq was just passing across very intermediate resistance, and it's been coming up. This means that smart money knew exactly what was going to occur. Retail just finds out later. In the background, you can see that light blue line. I'll just make it a little darker. That particular blue line, this is Bitcoin. So you can see the directional correlation and alignment between crypto, which is a very, very good risk indicator, and the major market index, which in this case is the Nasdaq. Looking at structural support and structural resistance is really important, so we're going to zoom into this specific area on a lower time frame to check it all out. Zooming into that time frame, we saw that the Nasdaq was trading and then started to base and jump like hell and has pretty much gone sideways. But it did a very, very big gap up, which in the most part is an institution-only invitation. That means if you're inside the stock market, it's really difficult to get in when the institutions have already just pushed the price up. Welcome to the stock market. We don't have that problem in the crypto market. Now, the real question, why did it jump up and why didn't it just keep on going? The answer is always the same. It's all about structure. So when we look at the structure on the Nasdaq, we can see it had overhead structural resistance around that 18,590 level. This particular area was a really good confluence because you can see all of these structural support levels. And I've just changed the background of the chart to give you a bit more of an edge in reading these levels. With the news of the US-China trade deal, and what we saw was a really big pump up. But the pump up was through one very strong structural level around that 18,250 mark up to the 18,590. All movements are structurally based, and we were seeing the crypto was coming up previously, which was measuring risk on sentiment inside the main markets. Now, what did we see here? As the main markets pumped up, crypto, Bitcoin, Ethereum, Doge, all of those decided to come back. We'll look into those in a minute. Now, what are we anticipating going forward? We need to look at the structure around these levels. Price is always moving from structural support into structural resistance. If it can overcome structural resistance, it's going to the next levels above. And when we get clusters of structural resistance, that makes it even harder for price to get through. If it can't go above, it's going to the levels below, and they do so immediately. So for example, if we saw this 18,570 level start to get wonky and start to weaken, we would anticipate a retracement to the 8,250 mark. If we get above these levels of structural overhead resistance, the next targets we would have are the 18,960 mark. Reading structure is very straightforward, and this structure is provided through the service. Or you can mark it up yourself very easily with Level 1 and Level 2 standard certification. You don't need to be a rocket scientist to do these levels, but these levels are very structured levels. Looking at Tsla, which is another call out for a community favorite, we can see it's not as strong as what we've seen inside the Nasdaq. It's just starting to get over its very initial resistance. And I say initial because this is not a long period of time. There's literally, you could say there's about 5,000 days worth of data for Tsla, and we're only looking at a handful. But it's where the majority of people look. Now, what we want to do is to look structurally, so we're going to just zoom in here and look at the structural levels. When you look at a price chart, it's very important to understand intercorrelation and interconnection. For example, with Tsla, which is inside the Nasdaq, if the Nasdaq has just jumped up, Tsla will jump up. Think about Bitcoin and Ethereum, or Bitcoin and ADA, Bitcoin and Solana, Bitcoin and Doge. If Bitcoin just jumps up, Doge will also jump up, but by different percentages. If Bitcoin comes down, the alts will come down with it. If Bitcoin goes up, the alts will go up with it. This up and down movement isn't just inside crypto, it's inside the stock market as well. This is why looking at intercorrelation and interconnection is so vitally important. Now, what we're seeing here, we had a very similar level of structural support. So we were coming into structure, and with the news of a tariff agreement, a temporary tariff agreement for 90 days, just remember, it's temporary, not permanent. We had that big push up. Now, the push up was actually caused by the tariff news, but you can also see this particular fingerprint is the fingerprint of the Nasdaq comp. This also means if you're looking and investing in or trading in Tsla, you must be aware of what the major indexes are doing, especially the Nasdaq. Now, when we look at Tsla, which is currently 318.61, there is a level of structural support at the 310. So if we find the major market indexes pulling back, that will pull back Tsla to this 310. If the 310 doesn't hold, the 298 has a lot of structure there. Now, this structure is based on all of price history. If we get upward progression in the Nasdaq in the next trading session, we would anticipate Tsla coming into the 333 level. The key that I said there, it's all about the major indexes coming up. The majors pull the minors. Tsla is a minor. The major are the indexes. Moving across to the crypto market, we can see total crypto market cap, which is the total market capitalization of all of the crypto projects just added together and represented inside one specific chart. We can see that it's actually done quite well. It's under support and it's going for it at the current time. We saw something really interesting. As the tariff news hit the street, we had an initial surge up, and that's been followed by a pushback, and now we're just slightly lower than the midpoint of that particular move. We're going to look into what this move means next. But the key is to understand total crypto market cap is in an uptrend. What we need to understand, where is the structural support and structural resistance levels? That's the critical thing. Now we're going to zoom into this specific area on a lower time frame, which is exactly how you read structure. First things first, I'm going to overlay Bitcoin with total crypto market cap. You can see how tightly associated they are from a directional stance. If Bitcoin is going up, the entire crypto market is coming up. If Bitcoin is going down, the entire crypto market is going down. Therefore, we must know the structure, not only inside total crypto market cap, but also inside Bitcoin. What you will find, and what we have found over years and years and years inside the crypto market, we are absolute veterans, is the concept that total crypto market cap and Bitcoin actually move as one. Their influences structurally impact the entire market. Okay, let's have a look at the structural levels. Now, what are we seeing here? When you look at total crypto market cap, we came in as the tariff announcement was just spread across social media and the news. We came in, we got across two levels of structural overhead resistance, but the third absolutely smashed the entire crypto market down. If price can't get above a specific level of structure, it's called a structural fail, or an SF. If you get a structural failure, it creates negative structural attraction, or NSA, immediately at that point down to the lower structural levels. And if there's a sufficient enough gap, you can get an SO, or structural overshoot, which is exactly the explanation of this kind of price action. Price will always react to structure, so we expect price will capture structure and get rebounded. If it doesn't continue onwards, it's another structural failure. One thing that just really keep your eyes on are the negative CTKS gaps. So if price is here, you've got a negative CTKS gap to the next level of structure below, you can get an SO, or structural overshoot, and it can take many levels of structure to hold price. You can see here that negative CTKS gap. This negative CTKS gap was bought up realistically very, very well with the structure down at this point. Remember what I showed you with Tsla and the Nasdaq. The same applies with Bitcoin, Total, and whatever you're investing or trading in inside the crypto market. You must pay attention to the structural levels of Total, the structural levels of Bitcoin, and the structural levels of your chart. After all, you work so hard for the money to put into your chart, the least you could do is honor that investment and all of that hard effort by knowing what you're doing and where smart money will be selling, where it will be buying, and how the structure is either holding price or not holding price. Are we getting structural passes or structural failures? And you can see we're getting structural failures at this current time. Looking into Bitcoin, which is an all-important chart, we can see it crossed over a level of very short-term resistance, and it's been going higher ever since. It's doing really well, but we need to understand this is on a daily basis, but we need to zoom into this area to determine where the structural resistance and structural support levels are. A lot of people think there's just fresh air or price discovery above previous all-time highs. This is a retail myth. There is always structure above and always structure below. When zooming in to the 15-minute chart on Bitcoin, we can see that we had that similar fingerprint. We know that the entire crypto market cap came into overhead structure resistance, rejected and pushed down. And we know that Bitcoin and total crypto market cap work together. So are we anticipating structural resistance here? To answer that question, we need to apply level 1 and level 2 standard certification to mark up all of price history. So let's check it out. Now, one thing that we see is that the actual structure was just a little bit above that 104,700 mark. There was overhead structural resistance inside total crypto market cap, and that's exactly why I showed you total crypto market cap first. Reading the structural levels is something that you really need to do, because if you don't read the structure, you might think, okay, we got across that, it's all smooth sailing, let's just get in and let's just buy it up. Which is also a pretty fair point, so long as you're not just going all in and more, but layering at structural levels down. Because when we're here, right around that 106 mark, a lot of people would say, there's no way in hell that we could go to 100, but yet we're pretty much there. This is the power of structure and something that you must become very aware of. This also simplifies your analysis to a great degree. When you understand how to use the key charts together, you're stacking probabilities like professionals do. Now, what do we notice here? And you know Bitcoin and total crypto market cap follow each other. Bitcoin had to come down through so many structural levels to be caught, and this is exactly why total crypto market flung itself backwards because Bitcoin came into 1, 2, 3, 4, 5, 6, 7 structural support levels, and that caused the rebound. What does it mean for Bitcoin now? Bitcoin is currently 102,543. We do have a lot of structure underpinning Bitcoin's price action at the moment. We know around that 104,700 is a key level. Just a little bit above 103,100 is also a key structural resistance level. If we're not going above, we're going below. If we get above, we're going to the next structural levels. And when we hit those structural levels, a decision will be made if we keep it, go higher, or if we lose it and come backwards. In yesterday's video, I was saying how important it is to have a three-dimensional strategy. Just if we broke out of this 104,700, that did favor a bull run up. But always keep your eyes on structure. It's very important to get follow through. And unfortunately, we saw that we did in fact break through the 104,700 and then we did a structural failure. The sellers were just too strong and they kept on pushing price down and down and down. What could have happened? And what probably did happen is that a lot of people got liquidated. And there was also capital rotation between the stock market and crypto, and then crypto and the stock market. This is pretty common stuff, but I would suggest your bias should be to the upside and not to the downside. Even though we can retrace, personally, I'd be using that as an opportunity to accumulate at this time. Why is this? What is the logic behind accumulation in a downtrend? Well, if you're accumulating at structural levels and you have your correct strategy, that aka you're not going all in and more, you're fractioning out your buy levels so you can take advantage of effectively real-time dollar cost averaging. Well, you're playing it smart because the crypto market is exponential. What I would anticipate by the 4th of July celebration, we're going to get a shock inside the markets globally. I believe it will all be, well, pretty choppy sailing, but in an upward direction. That's the key date I have in my own mind. Let's have a look at Ethereum. We can see that kind of absolute same mirror image behavior. This is called directional price. And when you throw it against something other than the actual chart, say Bitcoin, it's directional correlation. Now, when we look at the structure, we can see Ethereum had structural overhead resistance at the 2600 mark. It was rejected, did an immediate structural failure, which opened up the structural level at 2560. It also failed again, which opened up the level around that 2540. When you know how to read structural failures, structural overshoots, it's an absolute game changer. And don't forget that Ethereum follows Bitcoin and total. So if you were investing in Ethereum, for example, you want to look at Bitcoin, you want to look at total structural levels and then parallel them across so you know where smart money is going to come in and buy and smart money will sell. To keep your eyes on Ethereum at the current time, the 2420 is very important, and getting above that 2520 is also important to maintain bullish price momentum. Just moving it around a little bit to help you out. If we lose that 2425 level and structurally fail, there's not a lot of structure to hold Ethereum's price. That is to the downside. So ETH could get very volatile if we see continued weakness in Bitcoin and continued weakness in total. Now, how do we know if we're going to get continued weakness? We look at total, we look at Bitcoin structurally. Is it structurally passing? Is it structurally failing? That's it. It's realistically that simple. Please let me know in the comments, where do you think price is going in the next 24 hours? Do you think we're going to see structural resistance levels challenged or structural support levels challenged? I'm really interested in your views. And when we look at Rule 287, price changes do not mean trend changes. Now, what does this mean? If you get a percentage change in price, be it positive or negative, it doesn't mean it's actually counteracting what the trend is currently. Another way of looking at this, we know that all price just simply moves between structural levels. Structural support, structural resistance, you get the idea. If you've got an uptrend, the trend is upwards. But price changes do not mean a trend change. This is a very important thing to just bear in mind. You can get a pullback in an uptrend, but it's still an uptrend. It hasn't changed trends. Typically what people do, they think the price change is the trend change. So if the price change has gone negative, the trend has flipped bearish. If we've got a positive price change, the trend has flipped bullish. We see it all the time in social media. It's absolutely nutty. The major thing to always just bear in mind, everything comes down to structure. Structural support is where we expect price to go forward and rebound. If it doesn't, it means there's panic inside the market and lower structural levels are opening up. The panic of fear and greed is real. Please let me know, how did you find the change of color on the charts? Does the white help, or you would prefer black? Please let me know in the comments. Also, because you made it this far, if you would like a chart to be covered off from the cheat sheet, please let me know which one it would be. And for the past couple of videos, I've actually been covering off 2 charts that were recommended by community members. If you would like to see a specific chart, please let me know inside the comments. I'd love to look after you. But of course, we can't do all the charts all the time. But I'll get to it as soon as I can. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.